Welcome to MexMoves, the weekly podcast where Damian Fraser and I, Eduardo Garcia, break down the topics and headlines shaping Mexico's business and financial landscape. How are you, Damian?
Very well indeed, Eduardo.
Great. This week, we have an interview with Carlos Madrazo, who oversees the operations of juice and beverage maker Jumex in the U.S., to talk about the company's strategy there with not just the Hispanic community, but mainstream America in mind. In addition to that, Damian and I will review how are the Chinese car makers doing in the Mexican market, the Telefónica final exit of Mexico, and review the performance of Victoria Rodríguez, the head of Banco de Mexico, Mexico's central bank. We will also do quick takes on some of the main events in the business world of Mexico this week. So, Damian, why don't you start with the Chinese car makers' performance here in Mexico?
Sure. Well, this week, GAC, one of the Chinese brands, announced to El Financiero, Economista, and some other newspapers that it was going to be assembling cars in the second half of this year. I couldn't find the actual underlying press release, but I assume they said it directly to these newspapers. Now, the second half is, a couple of months away, but they didn't announce a location, which just seems a bit strange. Nor did they announce, as far as I could see, kind of production figures. So I think a little bit of skepticism is in order, given that Mexico is right now in the middle of the USMCA review, and would they want something like this to happen right now? But the Mexican newspapers, at least, are reporting it as a fact. They say they're going to be the first Chinese automaker to assemble cars, but I think GAC is already assembling cars, but maybe there's a definitional issue where GAC's value added in Mexico is quite light. All the design and everything is done out of China, and most of the parts come from China. So maybe this is, if it's true, maybe it's going to be a bigger deal. Maybe, buy the Nissan factory in Morelos. Who knows? A lot of details are still to be defined, if there are details here. Now, as we've talked about before, and as I think everyone knows, one of the big changes in Mexico over the last 6 years has been the Chinese entry into the car market. Back in 2019, they had 1%. First quarter of this year, their market share came up to about 16%. But also, in addition to that, there are mostly US cars, Chevrolet, Ford, Stellantis models made in China, but not perceived as Chinese. And if you add those up, Chinese-made cars come up to about 20% of the market. So one in five cars from practically nothing 5 or 6 years ago. So that obviously means that the rest of the market has effectively shrunk. And Nissan is still number one in the first quarter, 67,000 units, or about 18% of the market. GM is second with 50,000 units in the first quarter, 13% share. But where you've seen the Chinese do especially well is sort of in the middle market. So BYD, which is the biggest, is at 16,000 units. MG at 14.5. Geely, which I don't really know that well, 10,700. And you've seen especially some of the premium European brands. Mercedes-Benz was down 36% apparently in the first quarter. BMW down 9%, and the BMW, Mercedes, and Audi sold 8,500 cars, which is half those three brands, which everyone is obviously familiar with. Half of what BYD sold in the first quarter of this year. So it's a big change, and I think drivers are clearly cost. I was looking at some prices of different cars in Mexico. The BYD MG5, which is a sort of sedan, it's at 300,000 pesos. Volkswagen Virtus, it's 350, so it's a decent 20% cut. Sport sedan, the BYD Seal is at 780, and the Tesla is over $1 million, so it's a 30-40% cut on the similar kind of Tesla. I think the cars from a quality point of view have obviously improved a lot, so that people are very very comfortable buying Chinese brands at this point, given the price differential. And because they've got decent scale at this point, they now have support that they didn't used to have, and dealerships and guarantees if something goes wrong with something goes wrong. Now the next stage is actually manufacturing cars, and Clearly, the incentive to do so has gone up now that Mexico's hiked tariffs on Chinese products. If this announcement is true, it could be a kind of turning point. BYD in the past has said it will produce in Mexico, then didn't really follow through on that. They do produce in Brazil. There was a podcast with Jorge Vallejo, was in Rodcast podcast, which I recommend, and he was asked, would they build in Mexico, manufacture in Mexico? And his answer was a bit Chinese, actually. He replied, what doesn't grow shrinks. So, there will be important moments going in the future, he said. So it's kind of indicating or subtly suggesting that it will happen. But of course, you do effectively need government approvals. And right now, I suspect the government won't want to do it. So that's some of the first quarter data. China continues to gain share, even with the tariffs. And maybe these tariffs didn't affect a lot of the cars actually being bought right now, as maybe they were imported at the end of last year. But clearly they've shaken up the market, especially the sort of smaller European and US players have seem to have lost presence versus the Chinese, and by far the biggest Chinese is BYD, and then MG is the second.
Yeah, I think the key question will be what the government does or says. I mean, because I'm afraid that the US will probably try to put in the review of the free trade agreement some provisions avoiding cars from China to go into the US, or I don't know if they would even forbid Chinese makers to come to Mexico, which is not something that it's within the parameters of the free trade, but to the fact that the Trump administration is very much anti-Chinese these days, they might do so, and we'll have to wait and see whether the Mexican government authorities approve of it or not. And so, yeah, it could grow or shrink or remain the same. It's going to be interesting. It's quite short now, the time for the free trade agreement to be renewed or not, which is July. But maybe it will be extended, and we will do it every year till the end of time, or something like that. The Chinese, the quality of the cars, Elon Musk made fun of them many years ago. He, I guess, now regrets being so blasé about the quality of Chinese cars. They seem to be very good, competitive, and Mexicans like that. Cheap price, good quality, why not?
Yeah, so I think to the extent that they do come to Mexico, it will be using Mexico as a platform for South America. I don't think the goal, as things stand, would be to export to the US, and it's not feasible given the tariffs that the US would likely impose on cars that have a significant or material non-USMCA value-added inputs. And it'd be very difficult, at least in the next 5 years, for China to produce cars in Mexico that have overwhelmingly sort of North American parts. So most of the value-added is going to come from China, or a good part of it, or more than 20% of it at least. So I think the US will block it from being an effective export platform to the US through rules of origin, but they can't really block it, for Mexico, and they can't really block it if they use Mexico as a platform for South America. But if Mexico puts also very high tariffs on Chinese cars that don't have a high North American value-added inputs, then it's going to be difficult for the cars to be competitive unless they link into a supply chain in Mexico. And we'll see whether this announcement is true. I'm not sure what they gain by saying it's going to happen in the second half. If it's not, maybe it's a strategy to pressure the federal government. Maybe they have a deal with a local government, which would be keen on an investment, wouldn't really care about USMCA or the geopolitical implications. So it's a pressure strategy. Announce it, and then it will happen, like startups often do. So moving on, Telefónica, they, as we saw, they sold their business announced the sale of their business. It's still subject to lots of regulatory approvals. Movistar Mexico for $450 million to an entity called Melissa Acquisition, which is a consortium backed by Oxio, which is a sort of telco as a service platform, and Newfoundland Capital, which is an emerging market asset manager. And if it's approved, as I'm sure it will be, their market share is relatively small in Mexico. This will be Telefónica's sort of exit from Spanish-speaking Latin America, except for Venezuela. So they've exited already Argentina, Chile, Colombia, Ecuador, Peru, Uruguay, and several other Central American markets. So although a lot of people are reading into this kind of stuff about Mexico and the possibility of competing with American Mobile, the fact that it's part of a broader exit from non-core markets, like the state of Spain, UK, Brazil, suggests it's more about an overall strategy turn than Mexico itself. That said, of course, they will be taking, I assume, at least a loss. They've invested more than $450 million, probably a lot more, between the purchases of Pegaso and other invested capital. And so the fact that they haven't been able to recover their investment, does suggest and underline the difficulties of competing against American Mobile because it's so dominant and because, it should be said, it's so good at what it does. And it's a combination of the two things. Now, Oxio, they're buying about 15% of subscribers, maybe 8% of revenues, because the ARPU, the revenue per customer for Telefónica customers, is a lot lower. Now, Oxio is a platform that allows other telephone operators basically to pay a service fee to Oxio, which will take care of all the logistics and the infrastructure so you can offer mobile services to your end customer. And as Telefónica itself doesn't have infrastructure, it rents infrastructure from AT&T for the most part. Basically, Oxio will be an intermediary between the final consumer, the mobile phone user, and the infrastructure provider, which is AT&T, which is what Telefónica's been doing since 2019. I think the difference is likely to be that Oxio is going to focus much more on finding consumer companies, banks, fintechs to take over the final customer relationship, and they will remain as sort of telco as a service player. So these 20 million or so Telefónica subscribers over time may end up migrating to Revolut or to Nu, which both have mobile phone businesses outside Mexico, Nu in Brazil, Revolut in the UK, but are both in Mexico. You may see consumer companies like Bimbo or Coppel doing more of what they're already doing, which is offering their own branded phone services. So I think what this suggests, although time will need to show whether it's true or not, is that people will be using phone services as a way of gaining customers, retaining customers, as loyalty rewards to customers. Basically, what Byte, the Walmart phone company, which has already got, depending on how you measure it, but already got more customers than Movistar, has been doing very, very successfully. Now, Byte has a sort of massive scale at this point, and it's part of Walmart, which is the largest private company in Mexico. So they probably don't need a telco as a service company like Oxio, and haven't needed them. But smaller companies, probably don't want to get into the job of negotiating with infrastructure providers and doing all the stuff you need to do to offer people mobile phones. So it makes sense for them to rent the service from Oxio, which then rents the service from AT&T or Atlan or whoever it might be that provides the underlying spectrum and infrastructure. So that's where I think it's most likely to go. And if that's true, I think it's good for the Mexican consumer, because you'll see a lot of people, like Byte has been doing, offering mobile phone and giving you free data and other types of rewards for being a good customer in their core business. So you'll get the opportunity to have phone service at a lower price and maybe even better service.
Yeah, interesting. People were worried that with the exit of Telefónica, the competitive levels of Mexico would decline. But what you just described, it's the contrary, that there will be more mobile virtual providers. Interestingly enough, AT&T is also, or has been reported as, claiming to try to exit the Mexican market. That's not yet clear, or what their strategy will be. But if they do, somebody else will buy that infrastructure that will be rented out to Oxio or whoever wants to use the infrastructure to provide telephone services to Mexicans. Interesting too, Telefónica tried in Latin America to gain ground. They were very excited to do so when they came down almost 2.5 decades ago. For whatever reasons, in the case of Mexico, they did face a tough competitor, which is América Móvil, which does know how to please the Mexican consumer. Some claim that the regulatory framework was never that equal for all the players that were trying to compete against América Móvil, but that's the way it has come to be. And now we'll get a new, if not provider, at least a new infrastructure per service company that will try to compete against América Móvil, which has a dominant presence in the Mexican market, as the regulators have said.
So should we move on to the central bank governor, Victoria Rodríguez? If you get a chance to read JP Spinetto's hit job, maybe that's a bit unfair on JP, but his critical column.
It's critical, but it's what's been said in many Mexican circles, Damian. We've heard that Victoria Rodríguez has not been very outspoken or hasn't had a very public presence. She seems to be a very private individual, and that has hurt the bank's stature in the world of central banks. She has given only very few interviews, and only to those that are aligned with the current administration. What sparked JP's column is the decision that the central bank took a few days ago to cut rates when inflation has gone up again, and while the world is seeing oil prices and fuel prices rapidly rise. Even though the decision was split between analysts with a slightly tendency towards a cut. I'm sure that if you had asked those same analysts the day before, many of them might have said that they would not cut. So the needle would have moved to the hawkish side. Yet the central bank did decide to cut, with only 3 members voting in favor of cutting and 2 against it. And that sparked JP's column not only on her performance, on whether the central bank is also losing credibility as it seeks to please more the government's concerns about growth. I think it's a fair questioning. I don't know. I mean, 3 out of 2, that means that the central bank is still going through some internal decision-making process. Moody's said in a press release that they weren't so surprised that it cut because that's the way that things were coming. And now the key will be the next meeting and to see what the decision is back then. The inflation of March came yesterday, if I'm not mistaken, and it was above 4%, which is the upper range of the central bank's inflation target. So yes, things are not rosy in the inflation front, and the central bank cut. Now, I've heard that the interest rates in Mexico are important, but they're not that crucial because not a lot of business get credit, not a lot of individuals have consumer loans or mortgage loans. So it is important, but not that important for the development of the growth of the Mexican economy. Nevertheless, it is important for the currency markets more than anything. And even despite the cut, the peso has not depreciated that much. So, which is sometimes that I think is needed to help Mexican exporters or give Mexico a little bit of an edge in terms of its tourism revenue and its export revenue. But the peso has weakened a little bit, but not that much. So maybe there was room for cut in that sense, and we'll have to wait and see what happens next.
Yeah, there was an article by Manuel Sanchez in El Financiero and also on his Substack in English. Manuel, as you may remember, was the former deputy governor of the central bank. It was also pretty critical. I mean, his argument was that there was a kind of inconsistency, a kind of cognitive dissonance, if you must, between the cut on the rate to 6.7% and then the minutes of the explanation that he was saying that when they talk about the state of the economy, they talk about rising inflation from 3.8 to 4.6. They talk about sticky core inflation. They talk about worsening kind of risks. They talk about rising inflation expectations for 2026, 4.2%. So everything kind of in the communication pointed to caution. Yeah, they cut anyway. So what he's saying is that the communication is poor or illogical in some respect, and that leads him and others to conclude that they're not acting solely to meet their mandate. The central bank has a single mandate in Mexico, which is to preserve the purchasing power of the currency. They don't have a dual mandate like in the US, but they could be, responding to other objectives that the finance ministry has, and the president has, which is weak growth and fiscal pressures, because government debt, a lot of the government debt is linked to the short-term interest rate. So he's saying they're kind of sending a message they don't care about inflation, and that itself is helping, in his view and JP's view, contributing to the deterioration of inflation expectations. So even if the act of moving interest rates doesn't change domestic demand and therefore inflation pressures that much in Mexico because of a lack of credit in general, the central bank has an opportunity as the sort of chief communicator of inflation and interest rates to guide inflation expectations. And they haven't done a good job at that. And Mexico, it has to be said, has persistently kind of missed its, the upper range of its inflation target, which is 3%. Now, it's not. That all said, it's a bit paradoxical that sort of Mexico is in this debate of hawks versus doves on interest rates, when actually Mexico, especially last year, has some of the highest real interest rates in the world of major countries, and it has very high interest rates, even though it had almost no economic growth. So, objectively speaking, the central bank has managed interest rate policy, in a very hawkish way until this last cut, and even this last cut. You had a bunch of serious economists saying they should cut because of weak growth. So it's more about the communication, I think, than the actual interest rate policy. And the communication is more the kind of lack of it in the sense that there's been very little visibility from the central bank head, and then the inconsistency between what's being written and what's being done. Now, I think there's also a subtext here. Victoria was brought in as a central bank governor by the former finance minister, Rogelio Ramirez de la O, when Arturo Herrera, had already been nominated as the central bank governor, and that nomination was withdrawn. And most people, including myself, which may reflect badly on us, didn't know who Victoria was. She had a relatively minor position in the Mexico City finance ministry, and it was a big surprise. And I think people interpreted the move partly as the finance minister and the president, AMLO at the time, actively wanting a weak central bank governor, someone with, without a strong personality, without strong kind of previous credentials. I think the finance ministry, sort of probably everywhere in the world, but certainly here in Mexico, sort of just de facto likes a weak central bank governor, or doesn't want a strong one, because they'd like to be the dominant player when it comes to managing economic policy. And I think AMLO, he wanted a woman in that position. But in addition, I think AMLO generally liked to have weak people, independent institutions, whether it be the Supreme Court, as maybe we're seeing right now, or in other areas, as a way of weakening those institutions. So maybe his original choice was Raquel Buenrostro. It was said in the newspapers at the time. She certainly wasn't weak, but very pro Cuatro T and AMLO. When that wasn't considered sort of palatable by the finance ministry, then they settled on Victoria. Now, Victoria has, I don't know her at all, but she has, from public reports, a very close relationship with Edgar Amador, who's the finance minister. She worked under Edgar in the finance ministry of Mexico City government, so he was her boss. Then he was ousted due to sort of differences within the sort of Cuatro T movement, and was jobless. And Victoria brought him to the central bank as her main advisor. So before he was finance minister, he was effectively reporting to her, but he was probably her, I'm told, her most important advisor by a long way. And then, of course, he's made finance minister. So his former subordinate and her former subordinate, have these two roles. So I think when people say that the central bank isn't only focusing on inflation, there's a sort of subtext that the finance ministry is calling the shots, and they want lower rates to reduce fiscal pressures and also to help growth. But objectively speaking, you can't really complain about interest rates in Mexico being too low. They're higher in real terms than anywhere else.
Yeah, that's correct. It's some economists, serious economists, do argue that the rates are too high here. But I think, like what you said, it's the messaging. It's inconsistent, and also the lack of presence, the lack of explanation. And even when they explain in written documents, like you said, it's contradictory. So that doesn't give a clear sense of what the central bank should be doing, or gives a clear sense that the central bank has this dual mandate, even though it's in its laws, it doesn't have it.
So shall we move to quick takes?
Why don't we do that?
If you want, I can kick off. Big profile of Ricardo Salinas in Bloomberg by our friend Michael O'Boyle. Goes through a lot of his legal travails. There's some, at least to me, some original reporting on his fight with AT&T, firing Paul Weiss, the law firm, not sending money that was going to be paid to AT&T back to Mexico. The overall sort of take is, he is, as we all know, this very controversial businessman, but over the last couple of years, his fortune has still enormous, has come down, partly because of these different tax disputes with the government that he's lost and had to pay a big fine, partly because of sort of debt travails at some of his companies, and the kind of question mark is whether his political ambitions are sincere. He really wants to be president, or whether he's using it as a cover to help support his different kind of business sort of litigations and general relationship with the public sector. But if that's the case, if it was intended as a business strategy, it's clearly failed, because he has to end up paying this massive, biggest ever tax dispute in the history of Mexico. On
my end, I have, Damian, the numbers of traffic from both Aeromexico and Volaris in different directions. Aeromexico saw a decline in its number of passengers that it moved in March, its third consecutive decline. The fall was 1.4%, while in the case of Volaris, it saw an increase of 4.5% in March, helped a little bit by spring breakers coming to Mexico. And they both are worried about fuel prices rising because of the war in Iran, are trying to take some measures to keep those prices under control.
On that, the airports also reported their March numbers. I thought what was interesting, GAP, which has the airports on the Pacific coast, including Guadalajara and Vallarta. Vallarta's numbers in March were down by 24%, and that's obviously driven by the El Mencho-related violence, which had a huge impact on Vallarta tourism. And Guadalajara also was hit. That people, basically delayed their trips to Guadalajara. That was down by 2%. And at the Azur level, which is their main airport, of course, is Cancun, you saw continued declines in Cancun, which is struggling, as we've talked about there. Their March traffic was down 5%. If you want to continue, fracking, I don't know if you got to see that, but the president has sort of announced, from my perspective, a welcome kind of U-turn on fracking. She's said that there's going to be a scientific committee go into more depth on this, but basically Mexico needs to be able to extract more natural gas because it's overly dependent on the US. 70% of its natural gas comes from the US right now. So the idea is to grow Mexico's natural gas from the current very, very low levels to sort of a threefold increase by 2035, which would basically go from about 2.3 billion per day to about 8 over the next decade, so a fourfold increase. And let's hope it happens, but obviously you need money, you need know-how, you need a sort of investment framework that would make sense for private players to get involved.
Yeah, interesting development, changing a little bit of course from AMLO's anti-fracking stand, and even the president had a stand against it at the beginning. But the dependence on natural gas in Mexico from the U.S. is so large that something needs to be done. Reality, in that case, seems to be sinking. I also have Fibrain, as we like to cover REITs. This is a hotel real estate trust. They will propose setting up a share buyback program of 250 million pesos, a bit more than $14 million, in order to give investors in the REIT confidence that the company will sustain or maintain the value of the shares at some point if it goes into rapid ups and downs. So that was an announcement the company made, and the decision will be taken by the end of this month on whether it goes ahead or not.
So last one from me. There was a bit of a hoo-ha about the new infrastructure law that's just been passed that we talked about previously. The law allows, basically improves the legal framework for public-private partnerships in infrastructure. Now, the concern was that there was a misreporting that Afores would be obliged to invest 30% of their money in these projects now. And Sheinbaum came out in the Mañanera, said that's not true. The president of the CONSA, who's been on our podcast, Guillermo Zamarripa, he said that's also not true. It's the 30% applies to the cap on structured investments, which includes infrastructure, but also investments in real estate and energy and lots of other things, and venture capital. And the 30% is also the limit on the most aggressive sort of CFORES or funds for the younger workers, and that the AFORES would continue to invest in a way that made sense for their contributors and future pensioners. There'd been some misreporting on this. But anyway, it's good news that the law has been approved. And it's good news that, the AFORES will invest in what are, generally speaking, meant to be at least high return opportunities. So I see it as a positive development. Now we need to see how the law will actually attract new investment in infrastructure. So with that, we can move on to our interview with Carlos Madrazo. So it's a delight to have with us today Carlos Madrazo. Carlos is head of Jumex USA, where he leads the expansion of one of Mexico's most iconic consumer brands, beverages, into the U.S. Beverage market. How are you, Carlos?
Pretty good, Damian. Thank you for having me.
I've known Carlos, I'm happy to say, for probably decades now. Before Jumex, for at least 10 years, he ran investor relations at Grupo Televisa from the U.S., and now he's been at Jumex for a couple of years, a bit more than that, leading this expansion of the Jumex brand into the US. So, Carlos, why don't we start off by saying how important right now is the USA to Jumex, and how important might it become, let's say, in 2030, 2035? What are your ambitions and what are your goals?
Well, the US is very important for us. It's already our second largest market after Mexico, and we have been in the US for more than 40 years. So it's not a new market for Jumex. We have a real business here and a very strong one in nectars. Now, a big part of building that business has Vilore, our sister company out of Texas. They have played a very important role over many years in helping us build our core nectars business. And that foundation matters a lot. We're not starting from scratch. Now, what's exciting now is that the US is not only an important business today, it's one of the biggest growth opportunities that we have going forward. Think about it. This is the largest beverage market in the world. The total market size is about 640 billion. And even the categories where we already play, such as fruit-based beverages, energy, and hydration, are very large. And now that we have just entered alcohol, that opens up even a bigger space. So for us, the story is really about building on something that's already strong. We're very proud of what we have built in nectars, but now we're aiming beyond that. We want to take the things that have always made Jumex strong, such as quality, flavor, authenticity, and obviously the strong brand recognition, and bring all of those attributes into new categories, new channels, new business models. And that's why you see us going after initiatives like Jumex Energy, hydration, alcohol, and building new channels like e-commerce and food service, and developing new business models like licensing and partnerships like the one we have with Arizona Beverages. So I would say the US is both a very important business for Jumex today, but it's also one of the most important growth opportunities for the company over the next several years.
And if we wanted to quantify that in broad terms, is Jumex USA today 5-10% of the business? And where would you like it to be in 5 years' time as a percentage of the total business?
I rather not get into the details, given that we're a private company, but I think that every company, every successful Mexican company that enters the US, allocates the resources, and gives it time, ends up with a business in the US that can be bigger than the business in Mexico.
And how are you responding, both in Mexico but in the US, which is your responsibility, to these evolving consumer preferences around health, less sugary drinks, new beverage categories that you mentioned a little bit? How are you responding to that? And how are these consumer preferences so different in the US or more evolved in the US than they are in Mexico?
Well, it's interesting, right? We see a lot of the trends happen in the US before they happen in Mexico. So we can't assume that something that works in Mexico is going to work in the US. And we think that one of the keys to be successful is to not assume that what works in Mexico is going to be applicable to the US. We are paying a lot of attention to the trends. There is a strong focus on functionality, a strong focus on clean ingredients, a strong focus on fewer ingredients, lower sugar. There is a strong interest on certifications, on organic, on non-GMO, on gluten-free. So we're paying a very close attention to what's driving growth, to try to make sure that everything that we launch is going to have a bigger chance to win.
And how would you describe the advantages of being in a global sense, a relatively small sort of Mexican bottler in the US, and what would be the disadvantages when you're going head to head with Coca-Cola Company or even Jugos del Valle, which is part of Coca-Cola, obviously?
Well, by the way, it's a really good time to be a Mexican brand in the US, not only because of the growth of the Hispanic market and the growing relevance and growing purchasing of the Hispanic market, but also because of the increasing appeal of Latin flavors within the Anglo market. But to answer your question, we are a genuine Mexican brand. We're not a US developed interpretation of one. I would say that's advantage number one. Second, we operate within a distinctive flavor space. Jumex can bring propositions that feel fresher and less generic. And also entrepreneurial agility, right? In some areas, we can move faster and more creatively than very large organizations. Now, the disadvantages are, as you can imagine, that we are less mainstream in the Anglo market. Our core market is a Hispanic base, and that's one of the things that we want to change. We have less scale in distribution and merchandising versus the global rivals. And also, we have more dependence on getting it right because we do not have the same margin for error.
So going to that subject of the sort of Hispanic market versus the broader US market, I mean, right now, am I right in saying that the vast majority of your sales are in the Hispanic consumers?
According to Nielsen, 51% of the transactions are not the Hispanic market, but the rest of the market, the general market. And, the market is much bigger than that. The Anglo market is much bigger than that. In other words, yes, our core is the Hispanic market because when a Hispanic goes to the grocery shop, they'll buy many times more bottles than a non-Hispanic but the opportunity for us is really to cross over into the Anglo market.
And how do you do that? I mean, what plans, what strategies have you come up with that help you expand into the broader Anglo market?
Well, it starts with making sure that we're launching the right categories, where we have the right to win, where we have some level of expertise, and where we market from the beginning to the Anglo market. It's a lot about how we position the brand. If we start in the Hispanic aisle, it's very likely that we're going to stay in the Hispanic aisle. But I'll give you a really good recent example. In October of 2024, we launched Jumex Hard in partnership with Arizona. And by the way, what happened is that we saw that the consumer was mixing the nectars with alcohol at home. We said, let's create something that's ready for them. And it's a challenging category because people are drinking less alcohol every day. And we were able to grow our US business in terms of cases sold by 25% in 1 year. And we went straight into the Anglo market with something that is of appeal to them as well. We gave us permission to win in that market as well.
So I imagine that distribution and logistics, is a key factor in driving your possible sort of growth in market share and so on. Walk us through what you've done to overcome challenges in distribution and logistics, and what more do you need to do?
Well, as I mentioned at the beginning, we have our sister company out of San Antonio, Vilore, and they have helped us build this incredible distribution at the retail level. But in the process of exploring additional areas of growth for Jumex, we have found that there are some distributors that are specialized by channel. So we also need to find ways of bringing them into the picture so that we are not limited to retail. We have recently launched in e-commerce, and we are launching in food service, and in many of those channels, you need to bring in additional participants to be able to reach the end consumer.
Do your margins correlate a lot with your scale? I mean, right now, is it pretty difficult to be profitable given that you have quite low scale, but your goal is, to get much better scale and much better profitability in the future? Or are the margins likely to be relatively stable, independent of how big you are?
No, obviously there are economies of scale in this business, and in our core business, we're very profitable. The company has grown almost every single year in the recent past, and it's been profitable for a while. The FX volatility always has an impact on our business, but it's a profitable and growing business. On the initiatives that we're launching now, first we need to build scale, and a lot of that has to do with the amount of marketing dollars that we're allocating to those initiatives. So it's okay for us. We are giving ourselves the permission to not be super profitable at the beginning, because we want to reinvest as much as we can in driving growth and in creating awareness and in expanding distribution, because we know that once we reach scale, the margins will normalize.
You said you couldn't share many numbers being a private company, which I totally understand. But to get a kind of idea of the growth of Jumex, I mean, how much bigger are you today, 2026, than maybe you were in 2018, 2019? Are you double or triple the size, 20% bigger? Just to give us some kind of dimension on how much larger you are as a business than when you joined.
I can tell you that the Nectars business over the last decade has grown at a CAGR of high single digits, which is a pretty remarkable rate, given the fact that we're in the juice/nectars category, which is a challenging category with people focused on less consumption of sugar. But there is such a strong appeal for nectars, for Jumex nectars in the US. With the initiatives that we started to launch over the last couple of years, we have been able to grow at a step-up function, the size of a business, but it's just the beginning. We think we can do much better. The nectars category, at the end of the day, is a $500 million category, it's a $500 million category, and the overall beverage industry, including alcohol and non-alcohol, is $640 billion. So as excited and happy that we are about the strength that we have in nectars, we know that we can take these and make it much bigger.
So outside nectars, where a lot of the growth will be, what initiatives are you most excited about, and why?
Well, we're very excited about what's next for Jumex Hard, again, which is the one that has 5% malt-based alcohol. It's a very bold move from the company to go into a category as different as what we had traditionally done. We've also expanded within the same business model, also with Arizona Beverages, with Jumex Energy, and that's a category that is a $25 billion category. It's very competitive, but I think we have a right to win within that segment. The energy drinks that are fruit-based are the ones that are growing the most, and if there is someone that can claim fruit expertise, is Jumex. We also decided to go into the gummies business, or the snacks business, which is the first time that we're doing snacks. We're doing it in Mexico, we're doing it in the US. It's a different formula and a different product offering, but here we have a chance of leading a category as large as the gummies categories in the US. There are only 5 brands that have launched a spicy version. And again, being a Mexican company, I think we have permission more than anyone else to put spice on a gummy. And it's following the spicy trends, which we're going to see more and more often, not only in gummies, but in beverages. We're seeing companies combine fruit drinks with spice, or fruit sodas with spice. So we're very excited about that.
Certain Mexican brands have been quite successful in the beverage sector in the US. I think Topo Chico, obviously, via Coca-Cola's muscles, been hugely successful. I think Electrolyte has also done very well in the US. How relevant are the lessons of those success stories to your job and making Jumex USA bigger?
No, super relevant, and that's the right question. No, and before launching this initiative in the US, we looked at all of them, the ones that were successful and the ones that are not. And there were a few lessons that came out of that analysis. Number one is, as I mentioned before, the fact that something works in Mexico doesn't mean that it's going to work in the US, or that a business model works in Mexico doesn't mean that it's going to work in the US. It's a totally different competitive environment. The second lesson I would say is marketing is critical. Brand marketing and trade marketing. Pricing alone is not going to get you known. Also, we might be very well known in the Hispanic aisle, but these companies have been very successful because they have crossed over into the Anglo aisle. Every one of those has a local execution team. As much as we have been able to create over the years, over 40 years, from Mexico in the US, it's very challenging to do it from Mexico. And having a local presence gives you a unique advantage and gives you the opportunity to take the company where you can do it. And I think finally, it's a very competitive market. We cannot underestimate the power of big bottling. And for any brand, any Mexican brand to be successful in the US, you have to give it time, you have to give it resources, and you have to give it continuity.
Would Jumex be open to having a local, like, private equity partner in the US to grow faster and achieve that scale that's so critical in the consumer beverage business?
I wouldn't be the right person to ask. That's a question to the Lopez family. But I would say that's the bottleneck. The bottleneck is not resources. The bottleneck is execution. We are going as fast as we can. We're very thoughtful about the way we're approaching this market. What we're saying is, let's choose the categories that have scale and that are growing and where we have a good chance of success. Let's leverage the attributes that make us unique, different, and let's try to conquer the market. Capital is not one of the issues that's keeping us from growing faster.
You mentioned quite a lot of initiatives, alcohol, snacks, obviously the core nectar business. Do you sometimes wonder if you're kind of biting off too many things and you should focus on one or two things and make them really big?
Some are going to work, hopefully more than less, hopefully the majority. Some are going to fail. When it comes to categories, we're not launching that many. We're launching categories in the places where we see that we have a chance to be successful. If you think about Jumex in Mexico, we're in every single category. The portfolio is very complete. We're not a nectars company, we're a beverages company. In the US, we're still a nectars company. So we're trying to bring in that expertise that we have in research and development into the US because we have it. The other innovations have to do with new channels and new business models. And yes, it's very challenging. And we need one to be incredibly successful, to really transform the business, but we're obviously pursuing for every single initiative to be successful.
A lot of your competitors are producing in the US for the US market. How difficult is it to produce in Mexico and export to the US? Does that change the business model?
It is not difficult. We've been doing it for 43 years. At the same time, we're exploring co-packing alternatives in the US, just in case the trade environment, the trade rules change one day. We need to have that ability to continue producing for a market. So we've opened up that option, but as of today, based on the analysis we continue to conduct, given that we are so productive and that we have scale and that we're vertically integrated and that we process the fruit that we use and that we produce in Mexico, even with the cost of transport to the very Northeast, we're still more competitive than producing locally.
So just help me understand the scenario planning you've done in case the big hike in tariffs or other trade barriers and non-trade barriers. You would produce with a local US partner as a kind of emergency measure?
Yes, absolutely. It makes sense, and I'm not saying we will never do it. I'm not saying we will always do it in Mexico. As a matter of fact, we have the plant in Mexico, in the Mexico City metropolitan area, but we also have a plant in Mexicali and a plant in Monterrey, which were built to service the US market.
Understood. What about your regional strategy in the US? Are you focusing on specific areas, or are you going after the whole of the US?
The whole of the US. You can find a Hispanic of Mexican descent in every single state, as you know. But up to this moment, the focus had been in Texas and California. Those two markets account for about 45% of our business. But just like we see a growing presence of Hispanics of Mexican descent in the rest of the US, we are making sure we're accessing the rest of the markets as well.
Understood. Carlos, I think unfortunately we run out of time. Thank you so much for sharing that knowledge and information with us and your perspectives on Jumex in the United States. Much appreciated.
Thank you, Damian. Good to be here.
Thank you for joining MexMoves, a weekly podcast on Mexican business and finance. Very much hope you tune in next week.